Okay guys, welcome back. Welcome to FX Beethoven, Forex Argo Decoded. My name is JD. Let's talk about EURUSD guys, so that you understand what is going on here and what to expect each day, each week. So based on what you have on high time frame, we have already seen that we are bearish. If you need, you can watch previous video, and you have seen that our current range we are working on is this one. This is our current range on EURUSD. So this is our current range on EURUSD, and we are having a pullback within this range. So since we know that, we have seen that we have got a retracement break of structure here on this monthly time frame, as you can see here. So after this retracement break of structure, we need to study the whole move EURUSD is making here, so that we understand how all of these next candles are likely to behave. So what you have to understand is that you have to mark your chart correctly, starting from even 6 months or whatever, to mark all of those imbalances sitting here, as I told you. As you can see here, we have imbalance resting above here. So you have to know that this imbalance, market may decide to come to fill this imbalance. The next thing you have to remember, you have to know all the imbalances market created before. You have to understand that, for example, if you have this balance here, even if market traded through it, so you have to understand this imbalance is very, very powerful. Mostly in case you want to take sniper entries, you have to know all of those imbalances. For example, if you look here in history, and this is what I'm using very often, NASDAQ. If you look at here, you see you have a pullback going higher on this level. And if you look left, you see we had a past imbalance here, resting here. So always know this imbalance, especially the end of that imbalance, because the market can easily use it for a quick reaction. Meaning here on EURUSD, you have to do what? You have to look left the current imbalance you have here and try to remember it, because the market can use it to create maybe a short time pullback. So do not forget this. This is a little secret I'm teaching you, and it is matching your zone. So you have to remember all of this secrets that I'm showing you guys here on this channel. So back to the point, we need to study this move. We already see that we have imbalance below it right here. This is our monthly imbalance or price inefficiency, and we need to go to our time frame to see the structure market is using here. Back to weekly time frame, you can see that we have a beautiful candles pushing higher with another imbalance resting below here on the weekly time frame. You have to know all of that. Now we want to study the structure market was using here until here, so that you understand what is likely to happen on this pair. So again, if you look left again, you see that you have a gap on EURUSD weekly time frame. You have to know this zone, because the market can also use it as a target. So going to the time frame, you can start looking at the structure market was using when it was pushing higher. You can simply see as market was pushing higher, you see you have a kind of structure high, structure low, structure high, structure low. But look what happened here. If we change to H4 time frame to show you clearly, on H4 time frame, after breaking the structure, as you can see here, we have a clear high, a clear low, a clear high, a clear low. After pushing higher, breaking this high, we see you didn't have any pullback, any clear pullback. Instead, you have internal structure continuation here. As you can see, market was using internal structure to continue a trend. Right here, as you can see, market did not create any pullback within our range, right? Market decided to use internal structure to continue a trend. So meaning we still have a zone here. Maybe this sponsored candle sitting here. We still have a zone here. Market did not come back to trade within it, but it's okay. We have to move with the market. Do not force a pullback. Do not force a pullback. Keep reacting to the structure market is giving you and follow along. So if you were to mark the structure, I would start over again, as this is a new structure market is using. From here, from internal structure, market is forming a new structure. High, low, high, low, high, low. Sorry, high, low. As you can see, a clear structure. These are your opportunity to buy the market because you have a true understanding of your range. So all of these are breakout structure market is using to continue an uptrend. So look what happens. Market broke a structure, it didn't come back, it traded higher, then traded lower to break this retracement structure, and then create a pullback within that bearish range we have from this retracement BOS you have here. Maybe if you go to 1 hour time frame, you will see that better. And then we have a deep pullback within our zone. All the way here, you see you have a clear deep pullback within our zone. Right here. So meaning our structure market is using this high as a structure and this low as what? As your structure. And then the market is breaking this high again. Guys, you are working on the order flow to see what is going on. After breaking this high, everything we see here is a range structure. Remember the concept we talked about on previous videos. Smart money objective. You can go and watch that video. So we have a range structure forming on this area. Here is this. Oh my God. What is it? So here we have a range structure forming. This is a range structure forming in this area. So when you are trading, you keep following this structure. You keep buying until market reverses. So when market reverses, you have to know your range. It is coming back to your zone. As you can see, market is creating now a deep pullback within our zone. You see it has traded on this candle and this area, or you can say you have a POI here sitting on this level. I'm not yet teaching POIs, but you have one here. So market is trading within our primary zone, if you remember the concept. Now after trading within our primary zone, now market is trying to push higher. As you can see, market is trying to do what? Market is trying to push higher. So what is the target now? The target will be this high. But look what happened after breaking our monthly structure we have here. Market did not come back all the way down here. No, market decided to maintain this retracement structure. It is this retracement structure. Again, do not forget this zone where market used the internal structure to maintain a trend, because the market can easily come back to create a deep pullback within this area. The same way, market decided to continue a trend from here all the way here. When market reached this zone, it decided to create a deep pullback within this area. So do not forget this. Understand this. Market has broken a structure here and has used the total structure to continue a trend, and until it came back to create a deep pullback within this area. The same way, market can easily come back to create a deep pullback within this area. So you have to understand the process of mitigation and how institution use it. So here, as you can see, we are pushing higher. we are pushing here. We understand that direction is that we are likely to take this high because the structure is still showing us bullishness. So what we have to do is to keep following what the market is giving us. Market broke this retracement structure in this area and then went higher. Create what? Create a shallow push to downside using what? Using internal structure to continue an uptrend, as you can see here. Then market is pushing higher to create what? To create a new high on this area. A new high. So meaning from here, our range starts from the bottom to the top, meaning EURUSD have a permission what? EURUSD have a permission of coming back here to create a new high, because this is our range. This is our range. Retracement structure. I will have to change the color so that you do not get confused. So this is our range from the low all the way to the high. This is our range. Remember, after identifying your range, you can create 50% of your range. You see 50% is here where market is trading. So meaning it is reaching a discount zone equilibrium. It has permission to go higher. So knowing that, after identifying your range, now we know we have what? We know we have internal structure that was formed here. Within this range, we have another range inside. Know that market can use it to do what? Market can use it to go higher. So you have to recognize that you have what? You have to recognize that you have a range within this zone. Can you change the color so that you remember your structure? You know you have a range within this area. So market can say to what? Market can say to use this range to do what? To continue an uptrend. So this is what you have to remember when it comes to what? When it comes to trading. So by understanding this, you know what you are going to do in case market shows you certain behaviors. So knowing that, you come here on this area. Since you are in premium, I mean here, when you are in a premium zone, you know market is going to is likely to do what? To create a pullback all the way down here. So meaning everything you're going to do, you're going to find a sell opportunity because the market needs to come back to this discount zone. This is what happened with a beautiful trade today. So this is what I'm going to show you, how market was able to sell from here using the same concept we are using. And I hope this video will help you guys, will help you where you are. So first of all, I understand that this is another breakout structure we have here based on internal structure. Internal structure was broken and the main structure was broken here. Then what I have to do is to keep using the raw time frame to see what was going on. On raw time frame, from this range, this internal range you have here, you can see how market was pushing higher. Market was pushing higher and then it started pushing down. But what was going on here? If we go to, we will use the raw time frame a bit so that you can understand. Maybe 3 minutes. Let's see, because there is some structure I want to show you. So basically, you can see as market was pushing higher, you can see all of those smaller structures market was using. All of those smaller structures market was using to move higher. You have to recognize those structures. Why am I skipping all of these structures? This is because all of these structures you see are internal structure of this retracement structure you see here. For example, if I was to mark this structure, I will do what? I will do something like this, for example. Let's say if this is the high, this is the low, this is the high, this is the low, this is the high, this is the low. After this break here, you see we didn't have any clear structure. Okay, that's okay. Understand that there is a shallow pullback here. But again, if we consider this high and this low, we will see that before market goes out to break this high, it was forming what? It was forming another structure inside. It was forming another structure inside which market has used. You see, which market has used to keep pushing higher. Meaning for me, in order to start thinking that this whole move is going down, I will wait till the market breaks this zero, for example, at least. In order to say that I have kind of intent, for example, I will say that I will wait until the market breaks this low. That's when I can think, okay, we are probably going to have a pullback, right? And this is what happened on this level when the market wicked below this area. By seeing that, we know that the market is likely to go down. All we need is to understand that from the top to the bottom, we have a bearish range here. Just take this whole move as a single move. We have a bearish range on that level. So I have to delete all of this to make it clear. So my first signal that we have a probable scenario of going down was when the market was trading lower on this area. So I have to study again internal structure market was using all the way down here. By seeing all of this structure market was using it to form this downtrend right here. You can see from here, after this break, I know this is the current internal structure we have that was broken. If this is a current structure that was broken, I have to study internal structure of it, because I know market can use that internal structure to continue a downtrend. So from here we have what? From here we have a structure low that was formed here, a structure high. Look at this retracement move. Then when the market is here, it comes back to clean out all of these highs, making this the main structure, as you can see. And then we have got what? We have got a break in this area. So meaning market went down to create a low, at the same time breaking our zone as a confirmation that we are probably going to go down. So everything we're gonna see from here all the way to the top is considered a pullback. All we have to do is to mark what? Is to mark our structure here to see what is going on here on this level. Maybe there is some point we can discuss, like point of invalidation, a point to know where market is likely to sell from. And again, we need to add session here. This is why we had a beautiful sale on this area during London. You can see this is the open of the week. This is the weekly open. Then you have Asian session forming, Frankfurt taking the low, right? Then you expect SMS on this level. So in this area, this where we need to do what? This year we need to short the market on EURUSD. Shorting the market here. Of course, your stop loss should be above the major liquidity, above this high. That is around 5 pips of stop loss. If you snipe, or even 6 or even 6 or 7, depending on how you want it. But this was a good trade, as you can see. Then what was the target? First of all, to target, you have to go through a time frame to see what? To see imbalance sitting here, as we discussed before. Then, before we continue, before we talk about the target here, you have to know that we have got what? We have got another break of structure here. So we are having a pullback forming on this area. So if market is willing to continue to go down, our trading session will tell us, so that we can decide to come back to trade on this area. Remember, we have internal range here. Market can easily come back to trade within primary zone of it, be on this retracement zone. Remember, we have imbalances sitting here on a higher time frame on H4. So here, from here, we have to know that our range, our current range starts from this high all the way to this low. We need to see market at least trading on a 50%, of it. And we have a secondary liquidity sitting here. If you remember the concept of the secondary liquidity, if you watched my previous video, you understand why. And then from this secondary liquidity, you have what? We have imbalance. We have imbalance resting above it. We have imbalance here. So we need to mark this imbalance. We need to mark all of these imbalances we have here. In case the market wants to use what? This market wants to use secondary zone to continue a downtrend. Market can do that by trading within that imbalance. What we have to do, going to 5-minute time frame, we have a retracement structure here. We have a retracement structure here, around 50% of our range. At least we want to see market trading on this level. It can even trade higher on this area, and then it continue to go down. So we'll be looking for a high of the day somewhere here to see if it creates a high of the day on Tuesday for us to go down. If anything else happens and the market continues to go higher, maybe if we have no idea of what will be happening because we are breaking the structure, we'll be waiting for Wednesday to do what? To find a setup. Based on daily time frame, remember we are seeking ways the market can trade lower if it is going to be bearish here or here. And also we are thinking how our weekly candle will move. Remember, we have started a new week. The weekly candle has opened here. So we need to see, according to the concept of power free, we need to see if it is going to be bullish. We need to see the weekly candle creating a low and it goes there to create a high, possibly taking this level. But as of now, we are moving one candle to another to try to identify our opportunity. Hope you understand. So look at how this candle is going to close. That to understand what I mean, let's say this bearish candle is going to close somewhere here. What we are thinking how another candle is going to do what? How another candle is going to maybe to open somewhere here and it creates a high, for example, somewhere here, and then goes down to create a low. So if you are thinking this, for example, let's say this is gonna be our bearish candle that will be formed. It can be bearish tomorrow, trade on this level and start rejecting and become bullish, right? But what we are thinking, if it is going to go down from the beginning of the move, if it's going to drop, where will it drop from? That is what you have to ask yourself. If you are going to have a chart looking like this, so where is market going to create this high? Remember the concept of power of free. The same here. If we are thinking this candle is going to be bearish, how could we know market is going to create a high here? Because our job is to sell the wicks, the candlestick highs. Our job is to sell here. If we don't sell here, we wait for another opportunity. Our job is to buy here. Hope you understand why we talk about this. So if this candle, the next Tuesday, the following candle is going to be bearish, for example, it can form a long wick, it can form a small wick. As you can see, candlestick can form any kind of wick. But how far can we go before we sell all the way down? So that is what we are doing here. We are trying to identify possible we are trying to identify possible ways a candlestick can do it. This candlestick can create a move. Hope you understand why we are doing this. So if this candle is pushing higher, we have a zone here. We are then marking it on our time frame. We have another zone here. We are going to wait, and then when a London key is on the start and the New York key is on the start, we will have an idea of what is going to happen. And we still have what? We still have imbalance resting here. Remember what the market is looking for. Market is looking for imbalance. Market is looking for what? Market is looking for imbalance. So the first imbalance was cleaned out. We are left with this one, with a beautiful doji candle forming here, which can be manipulated. Hope you understand. So this is it. This is what we are waiting for tomorrow. The same on the GBP USD. You can see the same. You can see it's the same. On the NASDAQ, I've been shorting and buying NASDAQ. On NASDAQ, so on NASDAQ, we are able to sell from this level all the way down, and we are also able to buy from this level. I'm currently holding a trade here. But I'm thinking this has a fairly high that failed to create a low, which can be a liquidity to target, and then trade somewhere here. But based on the monthly open, somewhere here. Monthly open is somewhere right here. This is the monthly open. If this month is going to be bullish, it must create a low. Always think about the power of free. It must create a low all the way down, and then it goes there to create a high. Right? So we are trying to think how this movement is likely to form. So again, we have what? We have a break of structure, meaning you have a bullish range from here, and we have what? Market was able to trade on 50% of our range, but trading on 50% of our range is not enough. So because on higher time frame we still have what? On higher time frame, like daily time frame, as you can see, look at daily time frame, we have what? We have a first imbalance being filled. This is why I tell you, always mark imbalances, because this is what the market is gonna use to do what? To make a movement. So you have imbalance here. Market is filling this imbalance and trying to create a pullback, right? So I believe this pullback is going to stop somewhere here, and then you come back to fill another imbalance here. This is what I'm thinking. I'm not trying to predict the market, because the market can go anywhere, you know. So I believe we are likely to trade somewhere on this area, and then come back, trade on this level, and possibly go higher, or possibly keep dropping, right? But if this movement we see creates a new high, my job is to think how the daily candle is going to behave when NASDAQ is here. If the daily candle shows me signs that is going to drop, then I will be doing what? I will be selling the high of it. If it gives me a sign that is going to, or if it doesn't give me signs of dropping, I will be waiting for another structure to form for me so that I can take advantage of it, right? Trading is all about reacting to what the market is telling you. It's not about always trying to predict, because when you try to predict, market may prove you wrong, right? All you have to do is to wait for market to give you information on it, and then take action accordingly. So this is it. subscribe and make sure you like the video, share to your friend, and then this market is for us, guys. Let's trade it with a high discipline, and we will succeed together, guys. So until next time, guys, good luck and good trading.